In this video, we're going to talk about social finance, trading under the ticker symbol SOFI, S-O-F-I. Before today's video begins, if you'd like to see more stock analysis videos, please like, comment, and subscribe to my channel for more. SOFI is a fintech company based and operating in the United States. It proposes the services of a bank and a broker and is completely cloud-based. The stock has been meeting a lot of success recently due to its growth and the potential that it can have for clients who would prefer the flexibility and the lower fees compared to a conventional bank. Because it is cloud-based, SoFi has a lot of flexibility to add new revenue streams and increase its coverage surface. It already has more than doubled its user base over the last 12 months at 2.6 million users, with 79 million accounts on its platform. Right now, the more significant catalyst that can potentially send SoFi to higher levels is the obtention of a bank charter. They don't have it yet, but recently SoFi acquired a small financial institution called Golden Pacific Bancorp and is looking to get its bank charter. The procedure should be completed by the year end. And from a price action perspective, the stock is currently trading at around $16, which is relatively low for a stock that peaked around $25. Its support level has been found near the $16 mark. So, it's pretty close to where its support was, and I don't believe that it'll be tested again in the immediate future. Looking at the options, the market sentiment is clearly favoring the buy side because there are a lot more call options than put options. The exercise prices are mostly at the money for October the 8th, but the short-term expectation is that the stock is going to test the $20 level before the end of month. The $25 level is a massive test for the stock as it has been the company's resistance since the beginning of the year, but once it goes beyond that level, we should see a huge spike to much higher levels. When we look at the trading volume of SoFi, it is hovering around 10 to 15 million shares, and this has been fairly constant over the past couple of days. The market is not currently heating up due to the potential spike it may have over the next couple of weeks, and this is why I think that it can be a good stock to enter now. In terms of growth stocks, I believe that SoFi definitely has the potential to fulfill what it promised to its investors, and it may come earlier than we think. With that being said, one element that we have to take into consideration is that the market may choose to sell the news once they obtain the bank chart. It's a bit counterintuitive, but stocks often do this as soon as the catalyst that they're based on has completed its course. I would recommend to have a position between 5 to 10% of your portfolio in SoFi shares. Now, looking at the overall environment, I think that we have to be careful about having too much exposure in equities at the moment, because the market has been predicted to eventually go through major pullbacks or recession for more than a decade at this point, after the QE years and the drastic increase in asset price and the corresponding decrease in their yields. We have to remember that the market isn't a mirror on how the economy is doing, because otherwise we would have seen a market trading a lot more sideways. Or in other words, if that is the case, we would have seen every single stock moving based off their fundamentals only. Then 2020 happened, and another big push to the stock prices and the asset prices, and this time not just for the blue chips, but also the growth stocks. There are, generally speaking, two explanations. The first one is that there is a compensation of the fact that money is drying up coming from the quantitative easing around the world. So even if the real economy has been stagnating over the years, capital chose to enter this huge melting pot of globalized finance and ended up just buying up shares. So that was the case for about a decade, but now quantitative easing is ending in North America, and in Europe, they are considering to slow it down. In other words, they will not be the main drives of what keeps the stock price up or higher in the years to come. On the other hand, capital around the world, because of geopolitical tensions increasing, they may choose to enter in Northern Hemisphere economies in general and North American economies in particular, because still, US is considered as the ultimate safe haven for capital, especially from regions that are not very easy. You see what I mean? Like having social unrests or turmoils and so on. So what this means for the market is that the degree of uncertainty will increase over the next month and years, especially as the expectation for a recession is building up after the party in 2020, and the recent announcements from the US Federal Reserve about the possibility of a recession coming down the pipeline. There also has been a buildup of economic difficulties coming from Asia, so all those elements do make me feel that it is important to keep the speculative plays at a reasonable level. Of course, SoFi is less speculative than before, so this is why I considered that, a higher percentage can be allocated to the SoFi shares. Thank you for watching. If you like my content, please like, comment, and subscribe to my channel.